Hello investors and traders, today we'll speak about Apple stock. We'll check its quarterly report, it was yesterday, so today we'll speak about Apple and Google stocks, about their earnings reports. So let's start with firstly with Apple. So the report of Apple, we can see here the net sales for the last year was about 96 billion. It's less than it was 3 months in the previous year. Also, we can check that the gross margin is decreased. It's also not so good. And let's check the net sales by regions. We can see that 22 is here, that the American one is decreasing, Europe is also decreasing, and what about China? China is about the same. So actually it looks like very similar by regions, by segments, but the total sales decreased is decreased year to year. And let's check by category. The iPhones we can see decreasing, but no, of course now the models, it's 12, 13, 14, it looks very similar. The change is not so huge, so maybe it's the reason why the revenue from iPhone selling are decreasing. The iPad, by the way, very interesting, iPad is increased. The wearables, home and accessories, also a small decrease, and services about the same. Let's have a look on the balance sheet of Apple. So cash, the amount of cash decreased. The company has now less cash in the balance sheet. And let's check, let's have a look on the term, the debt. The debt is, by the way, long-term debt. It's supposed to be here. The debt is the same, but look, it's about 100 billion of debt. It's not a small portion, so the company of course has that on its balance sheet. And another point, so here look, the cash flows of the company, operating activity, cash flow from operation, here decreasing. It was 46 billion, now in 34 billion. The cash flow financing increased, and also where is investment activities, investing here. By the way, it's very significant decreasement. It was 16 billion last year, and now it's only 1 billion and 4. So the investment of the company is now increasing, so maybe it can be a nice sign for investors that the company won't spend a lot of money in the near future. Let's have a look on Apple charts. So it's 150. The pre-market today is about the same. The reaction is neutral. So look, the P ratio now is 24. So I can't tell it's cheap, because we see here it was 12, 15, a long time it was less than 20, so 24 is not cheap. The PS ratio, price per share, let's check, about 6, it's also not cheap. So for me, Apple, it's not a cheap stock at all. Of course it's paid dividend, but dividend payment, dividend yield less than 1%, it's not interesting for me. Market cap is 2.3 trillion bucks. And the marginality, by the way, we can see here the marginality is start to decrease. It was 28% to 85, 24, and now it's 22%. By the way, the revenue of this company also decreasing. We can see that last quarters it's begin to decrease. Not sure that now Apple is interesting stock for me. It's not dividend blue chip. So, and by the way, maybe it was a nice moment to buy if it was 120, 110. But now, after such report, I'm not sure that Apple is the best to buy. The next stock for today is Google Alphabet. So today this company also reported its earning. So we have dismiss in the EPS, earning per share, but it was not significant, and about 100 million dismiss in the in its revenue, but any case it still earned 76 billion per quarter, so I think it's a huge amount. So let's have a look on Google report quickly. Let's check the quarterly data. So it increasement in the revenue 1%, the operating income also operating income but it increased, and the operating margin also is decreasing, so not I can say it wow. And the net income of this company is also decreased. So by the way, we can see the main parameters, the income, marginality, and EPS decreasement in these parameters. Let's have a look on the revenue. So we can see that Google search and other is about the same. YouTube advertising is about the same. It's a small decreasement. Google network is about the same. So all the positions, telling you the truth, are very similar. No, I don't see significant change numbers, but number of employees we can see huge bounce here, year to year. It's quarter to quarter, yeah. But now after all the layoffs, I think it's this figure is significantly less. Segments operating results, not something special. So for me, the report of Google is also not so impressive. Decreasing in marginality, in operation margin, in net income, in EPS. Also the valuation now, let's check, it's 21. By the way, it's better than Apple, because here it was for a long time, it was 30, 25, 26, now it's 21. It's by the way the same levels as the COVID crisis and as the decreasement of the stock markets in 2018. So it can be interesting. P ratio 21. By the way, why we see the decreasing of P price per earnings, so it means that the earning of this company increasing. At the same time, the price it can stay at the same level. We can see that, yeah, actually we are traded not so far from the levels of pre-COVID, from pre-pandemic period. It is up to 26% from this level, and the net income, let's check that it's really increasing. Yeah, the net income, look, in 2019 it was net income the 34 billion, then it was 40, and now net income increased 76 billion, and it was annual data. So it can be interesting. It's, for me, Google now is a more attractive stock than Apple. But let's check the PS ratio. The PS about 5. Also not so cheap. It was 8, it was 6, 7, now it's 5 PS. The marginality, the gross margin, let me check the gross margin. Now it's about 70%. No, if if it will be another option to see Google stock at the levels of maybe 80 bucks, maybe a little bit lower, 60 bucks. Of course, it can be interesting, and it would be very cheap stock. Now P ratio 20, I'm not sure it's so cheap and so attractive. So if you like this video, press the like button, subscribe to my channel, and see you on the next time. Bye.